Welcome to Small Business Essentials. Set your business up for success and scalability. I'm Jerry Detweiler, Education Director with NAV.
And I'm Ty Kiesel, Director of Content at NAV. We're really excited to be here today. We're going to just jump right in and answer the question, why take these steps now? You don't know what the steps are, but we're going to go through a number of things that as a business owner, you need to know to set your business up so that whether you're a new business or in a more established business, you can present the best face to a small business lender when it comes time to get a loan.
Now, the first step is that you want to make sure that you establish a business that looks and is reputable. And these details do matter, not just in terms of getting customers, but also in terms of lenders and what they want to see out of the businesses that they are going to lend money to. So you will need to make sure that you've chosen a good business name. If you've already done this, then you may want to do just a little bit more research to make sure that there's not a problem in terms of trademarks, for example. You want to check your business credit because we do see at NAV that businesses sometimes get mixed up when it comes to their credit profile with other businesses. And so your information could appear on someone else's credit report or vice versa on the business side. So make sure you check that. If you are a newer business or if you haven't established the domain name for your business, I would recommend you do that as soon as possible. It can be hard to find the right domain name. So you want to register and save that as quickly as you can, and then check social media profiles as well, because it can be difficult if your business name is being used by another social media or with another social media handle. That could cause confusion in the market, and it could cause confusion if a lender was checking on that information. You'll also need a business address. Now, some of you do operate from home-based businesses, and that's perfectly fine. But you may want to get a mailing address that you can put on your website, your business cards, or any place else where you have to give out an address so you aren't putting your home address on everything. That's your choice. There are services. The USPS does have a postal box service with a physical address, and then there are third-party services that can either give you a virtual office with a physical address or just a physical address. And then what you can do is you may have to provide your home office address, say for your tax filings, or the lender, if they see you're using a box as your mailing address, they may want to verify the physical address that you're working from. As long as it makes sense, that's fine. But you aren't plastering it on your website and other public places. And then the third thing is to get a business phone number. So you could certainly get a business telephone line for your office if you have an office. You could hire an answering service to answer your phone calls for you. Or another option is to get a virtual phone number, and this could actually ring to your cell phone. So it would give you a distinctive ring so you would know that it's a business call versus a personal call, and you could answer accordingly. You could answer with the name of your business. So it's very professional, and it lets you turn off business calls, say in the evenings or weekends when you don't want to be taking those calls, let them go to voicemail. They offer a lot of flexibility. There's several services that do this. Sideline is one, SmartLine from GoDaddy. Google Voice even has the ability to set up a virtual phone number that you can use for your business. So I would recommend that you not use your personal cell phone number, the same number you're going to answer when your friends and family call you for your business, and you have a separate phone number.
You know, you want to create a business entity. And, you know, this is not to say that a DBA or a sole proprietorship is bad, but if you incorporate or have an LLC or something a little more formal, it makes it a little bit easier to get a small business loan. And the reason for that is because it compels you to separate your personal finances and your business finances. It makes it easier for the lender to evaluate your business and see if it's if it's profitable or not. See if you're generating income or not. It's not the end of the world if you decide not to, but it is a good idea. Also, register your name with the state, or a fictitious name, your DBA, with the state. If you're a new business, that matters because the clock starts ticking as soon as your business starts. If you're an established business, it matters because it just, the lender's going to want to see Ty's plumbing service and not Ty Kiesel when they look up my business to see if they want to give me a loan or not. Another good idea is to get an employer ID number. An EIN is free from the IRS. It's likely not required in all lending situations, but it's like your business's social security number. And it's just a good idea to get this, as is it a good idea to get any licenses and permits and all of those kind of things that you're going to need to do business. If you have questions about it and you're not sure where to go, you can check with an SBA resource. You can go into SCORE. You can check with the small business development councils that are in all of the most all of the local colleges, universities. Somewhere there's going to be an SBDC in your area, and any one of those resources can help you get the proper licenses and permits that you're going to need.
Yes, and that's one of the many resources you will find as part of this program. So make sure you check for those resources so you can access the additional guidance that we've provided in this program. So the other thing I would say that goes along this line is to make sure that you have at least a reputable online presence, even if it's not a major online presence. Some businesses, for example, will only do business on Facebook. Well, not everybody's going to reach you there, or some businesses only do business on a social media account. And that may be fine, but you don't have any ownership over that. They could change their policies, their algorithms, and it could disappear overnight. So you do want to have at least a basic website, and it's one that should present your business well, even if it's just a page with the information they need, but it helps customers find you, helps them reach you, and it looks professional. And when you do that, you can also get an email address with your website URL in it. So I do not recommend that you continue to do business using a Hotmail, Gmail, or Yahoo account. It just doesn't look as professional. And there have been data breaches in the past with some of these services, and you don't want to be in a position of having to tell your customers that their information might have been accessed through one of these free email services. So when you get the website, you can get an email address tied to your domain name. So be at whatever your domain name is. And then finally, social media. You don't have to be on every social media platform, but the ones you are on, you want to check regularly, because there are lenders who will look at these things. They'll just check your website, they'll check your social media. And in fact, Experian has a score that they can sell on the business side that incorporates the business's social media information. So you want to at least be responding and provide at least semi-regular updates in a professional way, so you're putting forth a good reputation for your business.
Yeah, your customers are talking about you on social media. You might as well be part of the conversation. Whether you're there or not, you're being talked about. You need to set a good foundation for growing. And the first step is to get a business bank account. Many lenders won't even lend to you if you don't have one. So you're going to want a business bank account. It legitimizes you in the eyes of your lender. And again, it's an indication that you have separated your business and personal finances and that they are not commingled. And another thing, I strongly suggest a business credit card. And the reason for that is business credit cards typically, unless you default, don't report your credit behavior to the the personal credit bureaus, but rather the business credit bureaus. And that's a question that you should ask any business credit card. Do you report to the business credit bureaus? Because you want to use this business credit card to build your business credit. And most of the businesses that use a credit card typically run higher balances than you would on a personal credit card. And those higher balances will not pull your business credit score down, but they can pull your personal credit score down if you were doing it on your personal cards. So consider a business credit card. I strongly recommend it. They typically are a little bit easier to qualify for than a line of credit or a small business loan. And if you've got a good personal credit score, it's relatively easy to get one.
Yes, and we do have a list of how the business credit cards report in the resource that we have shared with this program. So the next thing is the fun part of your business. You need to be on top of your financials. So you need a bookkeeping system so that your financials are kept up to date. We've seen this time and time again at NAV with small business owners who think that the only time they need to worry about this is when they need to send everything over to their accountant. And at that point, it might be too late and you might miss out on opportunities. So you want a bookkeeping system that's keeping your record keeping up to date on a regular basis, ideally daily or weekly, but if not, on a monthly basis. So if that means you need to outsource to a bookkeeper that you trust, and of course you want to verify that they're doing it, that the information is correct, but then you want that updated on a regular basis. And then use that information. You want to have a relationship with your accountant so that you understand what this is telling you about your business. This is not just for tax purposes. It's essential for good financing offers to have your accounting up to date and to understand some of your basic financials, because those are things that lenders may use to make decisions about your business.
You know, I was speaking with a lender one time who said, if I can understand more about a business's health by looking at the financials than the business owner, I'm not going to offer them a loan. So you really need to understand these numbers. And if you've got a consultative relationship with your accountant, that's the best case scenario. And if not, they should at least be able to explain to you what all of these financial reports mean and what the numbers mean. And yeah, you got to know the numbers. There's no question.
Another point that's related to this, Ty and I were talking earlier. I talked to a commercial banker who talked about the fact that he'll have customers come in to try to get financing, and their income or their profit for their business will be too low. And if he says something, sometimes they'll say, "Well, that's not really how much I make in my business. That's just what I tell the IRS I make in my business." And that's not going to be positive in terms of getting a loan. If you are not reporting all your income, or if you're really pushing the envelope on expenses that you deduct. Now, you should, of course, deduct legitimate expenses that are legitimately deductible. But if you're really pushing the envelope and trying to write off personal expenses as business expenses to save a little bit of money on your taxes, you're probably going to shortchange your business, and you will miss out on some of the best financing offers because your business doesn't show the kind of revenue that these lenders want to see.
This made it really difficult for a lot of businesses about this time last year that were trying to get PPP funds, because they couldn't demonstrate their payroll. They couldn't demonstrate their income. It made it really hard. So, I know that when I started my business years ago, this was not why I did it. I did not want to do bookkeeping. I wasn't excited to do this, but I came to understand that this is a critical part of running a business. And I had to bite the bullet and spend time to do it.
All right. The other thing you want to do is establish some business credit. So this is a separate webinar that we have recorded, but I'll give you the short version here. You'll get a DUNS number, which is the identifier in the Dun& Bradstreet business credit system. Equifax and Experian have their own identifiers, but you don't request one proactively. They will assign one once something shows up that starts your credit file. And then you can follow our Build Business Credit checklist. And that checklist is in the resources. So you will get that checklist there. But the basic process is that you are going to establish accounts with companies that report to your business credit reports, pay on time, and keep your debt low. It's very similar to consumer credit in that regard, and that will go a long way to helping you build business credit. Now, at NAV, we don't believe that business credit is the be-all, end-all. You still need to work on your personal credit. Many lenders, especially traditional lenders like banks, are going to want to look at the owner's personal credit as well. But business credit can expand your financing options. It can give you more financing options. And so it's one part of the equation as you're looking for financing for your business.
Okay. I love talking about strategic borrowing. Um, Most of the time, a lot of businesses, they reactively borrow money when they come short. And I would like to, if I could wave a magic wand and do anything to help small business owners in this regard, I would say be strategic. Anticipate your business cycle. Even if you're not in a traditionally considered seasonal business, the revenue in your business and your income ebbs and flows throughout the year. Anticipate those times. I totally recommend this time of year, if you haven't mapped out a plan for your business and what you may or may not need money for, or when you may need money, please do so now, because it allows you to borrow wisely. So you're strategically able to prepare for when you need money, and you're able to borrow just what you need to meet the needs. It's a great opportunity to get your financial house not only in order, but allow you to borrow when it makes sense, and to avoid panic borrowing, and establish goals, set metrics, follow what's going on from year to year. Because if you are keeping track of what happened, last year's not a good example, but if you knew what was going on in 2019, you could anticipate what was going to happen this year. And even last year, if you've been monitoring the numbers from last year, it's going to help you set reasonable goals and reasonable milestones that you can measure. So my advice is to think more strategically as you borrow, so that you can maximize the value of every dollar you borrow, because borrowing money is expensive. There is a cost associated with it, whether you get the money from the SBA or anywhere else. And I just can't harp on this enough. You want to be strategic with your borrowing, and that requires that you make a plan for the year.
Yeah, absolutely. Now, the other thing you want to understand is how lenders assess you, so you can keep track of the factors that lenders look at. The primary three factors that lenders are going to look at are credit scores. That could be business, personal, or a combination of both business and personal. Cash flow and revenue is going to be key. And that's where that business bank account that Ty mentioned is so important, because increasingly lenders want to either get bank statements or even connect to your bank account so they can analyze the activity in your bank account to determine how much you may qualify for based on the revenue of your business. That's going to be really important. And then time in business. Most lenders, 2 years is kind of a magic number, but at NAV, we work with lenders who will lend to businesses 6 months old and 1 year old. It's a little bit harder on the startup stage to get much financing. That's where business credit cards are often a good first start for many borrowers. But that time in business is also going to be important. So you want to pay attention to these factors and make sure you're showing yourself in the best light. So just for example, with time in business, as Ty mentioned, you could get that employer identification number, and that could be that could indicate, that could be the date you use as the start date for your business if you didn't incorporate. If you incorporated, then you'd probably want to use that date that you incorporated, unless you had the business before and then you changed the corporate structure, in which case you may be able to carry it over to the new business. So just be cognizant of these factors, monitor them, and understand that they will play a role in whether you get financing and how much financing you get.
I mean, I am really jazzed about this presentation because there are so many things in here that I wish I had known 25 or 30 years ago when I was running my own business. Get a mentor. There's lots of free help available to you. The SBA has resource partners, SCORE and SBDCs. There are lots of places that you can go and find a mentor who will help you navigate maybe some of the things that you're less familiar with. And not just for new businesses. Maybe you're a business that's been around for 4 or 5 years and you want to figure out the best way to make that big push to grow your business to the next level. These places are still available. A mentor will still be able to help you because they've been there and they've done it before. So get a mentor.
Yeah, they can help with things like exporting, with moving into technology, with whether it's ramping up your social media presence or marketing. They can do free market research. They have tools that can help you do market research. So just a really good option for you for your business. And then finally, once you've laid this foundation and the foundation is strong, you're looking for financing that fits your goals. And NAV would certainly love to help you with that. So you can establish a line of credit, for example, that will be available to help with cash flow. One thing we see working with so many small business owners at NAV is that sometimes businesses will wait until there's that crisis or opportunity and they need money yesterday. The ideal time to look for financing is before you need it. So the ideal time to line up that line of credit is before you need to tap it. So that way it's available for you to take advantage of what comes next for your business. And I think particularly with all the uncertainty in the economy over the past year and the coming year, business owners understand better than ever before how important it is to be prepared for different scenarios and different situations. And so NAV can help you do that. And you can just start at nav.com.
Some of the other things that you should do, or you should at least consider doing, create a business plan. And this isn't a one and done business plan. This is a living document that you revisit maybe at least once a quarter to see how you're doing compared to the plan. Um, don't be afraid to take small steps towards bigger goals. They say that in Japan, they say the journey of 1,000 miles begins with the first step. And you're not going to do 1,000 miles in one leap, but it's going to be small steps to get you there. And don't be afraid to take that approach. And as your business grows and changes and your revenue situation changes and your business credit profile changes, your financing options are going to change as well. So take some time to review your options, make sure you know what's available to you. I'm a big, huge fan of a line of credit because it builds a relationship with a lender, and it gives you an amount of available credit when you need it. And if you need money tomorrow to take advantage of an opportunity to make more revenue, it's really hard to go into the bank and expect to get money tomorrow. So, always be on top of what's available to you and review your financing options. So these 3 additional steps, think of them as bonus steps for what you need to do to set a strong business foundation.
So get started. Use the resources that we have provided with this program. Set your goals and set realistic but achievable and goals that can help you get to that next level. We have a number of other webinars that will help you understand how to create a business plan, prepare for business financing, build business credit, and a lot more. And then when you log into NAV, review your financing matches, because those will be updated as new financing options match the data in your profile. And you may find options there that are a great fit for where your business is at or where you plan to be going in the near term future. And you'll find those right there. We hope you found this helpful, and we hope you'll continue to join us for more webinars to help your business get the financing it needs to grow and thrive. Thank you.
Thanks for being here.